What would you do with $1,000 right now? Buy the latest gadget? Take a short trip? Well, I decided to do something different. I invested it. In this video, I'm breaking down exactly how I invested $1,000 in 2026, how I split it across different investments, the strategy behind each decision, and what you can learn from it, whether you're a complete beginner or someone looking to refine your approach. How I invested $1,000 in 2026. Let's dive in. My investment philosophy. Before we get into the numbers, let me be clear. I'm not a financial advisor, and this is not financial advice. This is simply what I personally did with my money and why. My investment philosophy is built on 3 core principles. First, diversification. I don't believe in putting all my eggs in one basket. Markets are unpredictable, so spreading risk is essential. Second, long-term thinking. This is not a get-rich-quick plan. I'm thinking 5, 10, even 20 years into the future. And third, risk tolerance. I'm comfortable with moderate risk. I can handle volatility, but I'm not gambling money I can't afford to lose. With just $1,000, I couldn't invest in everything, so I had to be intentional. Here's how I broke it down. The breakdown overview. Here's a quick overview of my $1,000 portfolio. 40% went into index funds, $400. 25% into individual stocks, $250. 20% into a high-yield savings or emergency fund, $200. 10% into cryptocurrency, $100. And 5% into alternative investments, $50. Now let me explain why. Index funds, $400. The foundation of my portfolio is index funds. This is my set it and forget it money. I invested $400 total, split between 2 ETFs. $250 into an S&P 500 index fund, and $150 into a total market index fund. Index funds are proven. Historically, the S&P 500 has averaged around 10% annual returns over the long term. They're low cost, highly diversified, and require almost no active management. Warren Buffett has famously said that most people should just invest in index funds, and I agree. This is the boring core of my portfolio, and boring is a good thing when building wealth. I also used a commission-free platform, so every dollar started working immediately. Individual stocks, $250. Next up, individual stocks. This is the more exciting part of the portfolio. I allocated $250 across 3 companies. $100 went into a tech growth company focused on AI and cloud computing. Technology continues to drive innovation, and I believe in its long-term growth. $75 went into a dividend-paying stock, a stable company with a strong history of paying shareholders. This gives me passive income while I hold. And another $75 went into a renewable energy company. I believe the global shift toward clean energy is only getting stronger. I'm not day trading these stocks. I researched each company, reviewed their financials, and focused on long-term potential. These are multi-year holds, not quick flips. The rule here is simple. Only invest in businesses you understand and believe in. High-yield savings, $200. This next part surprises some people. I kept $200 in a high-yield savings account. Is it exciting? No. Is it necessary? Absolutely. In 2026, many high-yield savings accounts are offering around 4 to 5% APY. That money is fully liquid, FDIC insured, and still growing faster than a traditional savings account. This is the beginning of my emergency fund. If something unexpected happens, I don't have to sell investments at a bad time. Financial security always comes before chasing returns. As many financial experts say, build your emergency fund first. That's exactly what this is. Cryptocurrency, $100. Now for the most controversial category, crypto. I invested $100 total, and I treat this as high risk, high reward money. I split like this: $60 into Bitcoin and $40 into Ethereum. Crypto is volatile. It could double or it could drop hard. That's why it's only 10% of my portfolio. I believe in blockchain technology long term. Bitcoin is often seen as digital gold, while Ethereum powers decentralized applications. My strategy here is simple: buy and hold. No panic selling. No FOMO buying. Just long-term conviction. If you're conservative, you might skip crypto entirely. If you're aggressive, you might allocate more. The key is knowing your risk tolerance. Alternative investments, $50. Finally, I invested $50 into alternative investments. This is my experimental money. I chose fractional real estate investing, which allows me to own small portions of rental properties without needing tens of thousands of dollars up front. Others might use this category for peer-to-peer lending, commodities like gold, or even collectibles. The goal here isn't massive returns. It's learning and diversification. The amount is small, but the experience is valuable. Key takeaways and closing. So that's how I invested $1,000 in 2026. Here are 3 key takeaways. First, start where you are. You don't need $10,000 to begin. Even $100 is enough to start building wealth. Second, diversify based on your goals and risk tolerance. My portfolio might not be right for you, and that's okay. Customize your strategy. And third, think long-term. Investing isn't about getting rich overnight. It's about consistency and patience. Time in the market beats timing the market. I'll be tracking this portfolio and sharing updates in future videos. The wins and the losses, because investing is a journey. If you found this helpful, hit the like button and subscribe for more investing content. And comment below, how would you invest $1,000? Thanks for watching. Remember, this isn't financial advice, just my personal experience. Always do your own research and invest responsibly. See you in the next one.